To keep up with today's increasing production demands, growers are quickly realizing traditional fertilizers are coming up short. Beyond a single form of sulfur, MicroEssentials with Fusion technology delivers sulfate and elemental sulfur for season-long availability. Early in the growing season, sulfate sulfur provides young plants the nutrition needed for optimal growth. But plants dependent on sulfate sulfur alone are left vulnerable to the yield-robbing impact of leaching. But MicroEssentials is very different. Over time, microbes in the soil more efficiently convert the elemental sulfur into sulfate, continuously supplying the crop throughout the entire season and beyond. Only MicroEssentials with Fusion technology delivers season-long sulfur for steady nutrition throughout the growing cycle, resulting in higher yields and higher profitability.
To have you here. It's been another wonderful day here at Big Iron. At the Red River Farm Network, we're excited. We've got a new element to our program this year. Marissa Nielsen from the Freedom Financial Group, been in this business 30 years. Excellent program yesterday, and we're excited to have you back on the stage today. Marissa?
Woohoo! Well, welcome to the house. I'm so excited to have you guys here today. We are going to have a great time for the next hour. We've got a lot of information to go through. As we go through, don't try to keep up with the PowerPoint that you see here in the room today, because I'm going to flip through several of these things. I want to just, first of all, thank you for coming, and thank you for making the time to be in this room to begin the planning process or update your planning process or go through a second opinion on your planning process. And we got a lot of stuff to go through in a short period of time. I want to just share with you, if you've not received one of these yet, these are some free planning packets that we have today. If you raise your hand, if you didn't get one of these on the way in, my team is here and they'll get those for you. This is a Get Started Planning Kit, and then the other thing that we've got is we've got a resource guide for you here today as well. So I want to share with you some information that can literally help you and your families grow forward from where you are to where you want to be. I want to talk a little bit about what we do here in North Dakota. The first little slide you see up here is the lawyer slide. Lawyers got to have their arms and everything, I guess. But this is the lawyer slide. It just says, hey, I'm not here to give you any individual advice for your farm or ranch today, but I'm here to educate, empower, and equip you to give you good information where you can take it and move forward. Now, I want to give you a little bit about myself. I am a farm kid from Max, North Dakota. I grew up learning the value of $1 rock picking. As we grew up on that farm, you can see I was that strapping young girl in the little purple, climbing out of the window. You know, I was always the one that was doing the daredevil stuff. And I always share with people, you know, where you come from matters, but what you do with it is even more important. And as I talk with you today, I want to give you some systems, some structures and strategies to help you follow for your farm and ranch today, for succession planning, for next generation planning. I learned a lot of value growing up on that farm. And in the late 80s, as a farm kid from Max, we went through what many of you who were farming during that time. How many of you were farming during the late 80s? By the way, my hat's off to you if you're still farming today, because that means you did something that we did not accomplish during that time. You were able to keep the family farm going, even when the high interest rates hit, even when things were bad. You came together and you figured out a plan on how to do that. Now, my family had 8 kids. When the late 80s hit and the interest rates hit, my folks went through some really hard times, and it ended up breaking up their marriage. They ended up divorcing. And I was there the day that the auctioneer pulled in, and my grandfather, this was homesteaded land, by the way, homesteaded land from my great-grandparents that came in to North Dakota. You got to be a hardy set of folks to come in and farm in North Dakota and homestead your land. They came in, and as they built this farm over the years, we had no idea what was going to hit our family in the late 80s, and my grandfather sat on the back of that flatbed trailer And I'll never forget the day. I can smell the dust in my nose still as I speak about it with you today. It was so impactful to me in that moment. He sat on the back of the flatbed trailer as the auctioneer stood up, and piece by piece by piece by piece by piece, our farm was auctioned off. Piece by piece by piece, the things that they had worked a lifetime to accumulate and build, the legacy that they thought that they would be leaving to us generationally, was now gone. And it changed everything. It changed the essence of a man. It changed my dad. My dad watched, I literally remember looking at my dad, watching my grandfather crying on the back of this flatbed trailer because everything was lost, including his marriage. And he looked at my grandfather, and the next day after that auction sale, he packed up, left the state, and never returned. And there are 8 kids in my family, so my mom moved us 8 kids to town. We lived in a 2-bedroom trailer in Minot, North Dakota, and we did what we needed to do to survive. And I won't go into the full story of that, but I will tell you it changes the essence of a man when it goes down on their watch. It changes the dynamics of your family when it goes down on your watch. And this is why I am here today. It's why I am passionate about serving the families I serve every day. It's why I am passionate about bringing together our team to serve your families, because you can't do it alone. And our clients today, we talk a lot about this, that we need to have a GPS. We need to have a road to follow. We need to have the steps to follow. We need to know what to do next. And in your tractors and in your cars and even on your phones, if you pull them out today, you've got a GPS there, a guided planning system that points you to what the next step is, what the right turn is, what the left turn is. This is what our team does. We bring together a tax plan, a legal plan, a wealth management plan, a risk management plan. And at the top of that is your goals. It's your dreams, it's your hopes, it's your legacy plan. It's those things coming together so that your family farm, your family, does not have to experience what my family experienced. On the way here, I drove past the Max sign. My dad welded that sign right north of Max. And I looked down that road to the end of the tree road where we used to farm. And I had a little twinge. And I said, today I'll fulfill my purpose, and I'll get up every single day, and I'm going to continue to speak till the day I die to every farmer and rancher I can, because I know what's at stake. I know what's at risk when your plan is not put together. I know what's at risk when we think we've got it all done, but we saw an accountant over here and an attorney over here and an insurance guy over here and a banker over here and a loan officer over here, but none of those people got around the same table and talked about your plan. So this is what our team does. We specialize in farm families. We specialize in helping people make good decisions during transition planning, succession planning, exit strategy planning with no next generation, with a next generation. We do tax strategies that people haven't heard of before, and they go, well, where'd you find that? Well, it's in the Internal Revenue Code. Let's send it on over to your accountant. And let's coordinate that plan. Let's put those people together on the same team. So on today's agenda, yesterday, if you weren't able to catch yesterday's presentation, I went into risk management pretty deep yesterday. So I'm going to fly through this portion of the presentation with you today. And then I'm going to go a little deeper dive on tax management today and some of those family communication things today. We also talk about retirement planning. We talk about how do you keep it out of the hands of nursing home? How do you protect and preserve those assets? How do you look at your plan today and make sure that legally it's in the right place, that you've talked to the right people and you've made that change? And I want to go back to this planning team conversation because it's much like Mayo Clinic, right? When you go to Mayo Clinic today, anybody had the fortune or the unfortune to be in that place at any time? Mayo Clinic, university, right? You look at those times. In 2015, my fiance got sick, and he called me. I'm a traditional girl. He called me and he said, "Babe, I can't walk." And I said, "What do you mean you can't walk? You're 6'3". You're built like a brick house. Are you kidding?" And I said, "Well, I'm coming over." So I came over to his house. I strapped him on my back, and I rushed him to the emergency room as fast as I could. And we got to that emergency room, and a few hours later, they told us, "We're so sorry to tell you, he is full of cancer." So what do you mean he's full of cancer? He's 6'3". He looks like Thor. He's built like a brick house. And they said, "We're going to airlift you tomorrow because he's got an 8-inch tumor on his neck and spine, and he has head-to-toe cancer, and he's lighting up like a Christmas tree on our technology." And I said, "Well, what do we do?" And when I got to Minnesota, here's what happened. They came into the room. The oncologists, the radiologists, the surgeons, the nurses, the doctors. I see one of my new nurse friends in the thing today, and I want to give you a little high five for thanks for coming to work for all those years when you stood there in those rooms and you held their hands and you loved those people when they were in pain. Because it matters when you show up when people are in pain. And he came around the room and they came around the bed and they said, how do we get you from here to there? How do we help him survive? How do we make a difference for you and your family? And they did, because he was supposed to live just a few days and he lived 100 days. And if you've ever sat with someone, you're living proof that you know every day matters, every day counts. In those final days, you want every moment you can. And I recognize what my team has been doing for 30 years in that moment. We sit around those tables and we're not the doctors and nurses in that room, but we're doing the same kind of process and we're helping them with your plan and we're saying, how do we bring those people together with your plan today? And I'm going to ask you to demand more a little bit. Just a moment. I'm going to ask you to ask for more when you talk to your advisors today. And you ask them, hey, guys, gals, we need to get in the same room and talk about our plan. We need to make sure that every part of this is covered so that our children and our children's children, the next 2 generations, sit at the same table and eat Thanksgiving dinner together. And that is why we exist, to educate, empower, and equip you and your families in your agriculture life, right? To make this difference around that table. So the very first thing I start off with is a few statistics, because the statistics are not in our favor, guys. They are not. 70% of farm families that were asked today said, we expect our next generation to take over our farm family, as a farm family. Next generations will continue this legacy plan. And yet 25% of those are planned. 72% of the women in this room today, 72% of nursing home residents are women. 72%. So what does that mean for us? That means we're going to have to make decisions. And when you look at how many of those have already lost their mate, their spouse, their husband that's been with them today, they are having to make the decisions without you gentlemen in the room. How many of you gentlemen in the room are married? So a lot of you. And I'm going to get real heavy for just 1 minute here with you. She needs you. She needs you. She needs you to walk beside her in this moment and help her with this decision process, because the 2 of you will make better decisions together. You will make better decisions together. You are her protector. You are the head of that household. You are the person that has been meant to walk with her on this journey. And I guarantee you that if you make these decisions together, you will make better decisions together than you will make separately. So the statistics are not in our favor. I want to talk about some of the enemies to you today. The enemies is no plan, no thinking partners, no strategy, no system to do that. There's a lot of things that become the enemies of your family during this time. No communication. Bad communication is another one. No communication and bad communication. Learning how to speak to the next generation, learning how that process should go. They need you to be their chief encouragement officer. And you say, well, how do I do that? Because they're screwing up and they're making me mad. And I say, okay, let's talk about that. What do we do next? So we call this level 10 communication. I'm going to give you a couple things that I just ask you to think about today. And then I'm going to get into some meat and potatoes of some of the financial things. Now, as I'm doing that, I just want to remind you, if you've been coming in to this session today, you will be able to, in just a minute, if you're watching online, in just a minute, you're going to grab your phone out, and you're going to have a QR code that you can hit on, and you're going to get a whole free resource book of things that you can use past today to help you in this planning process, including our transition planning checklist, an estate planning checklist, a document planning checklist, several assessments that you can use with your people back home, your accountant, attorney, financial advisor, the people that you're working with. Level 10 communication starts with just that. We need to sit around a table and we need to ask certain questions, and sometimes it's real hard even to start that conversation with people. Level 10 communication starts with, paint me the picture of what do you want to see happen here? How do we keep this fair? Fair isn't always equal. Who's involved in the conversation at certain times? What do we talk about when we don't really want to talk about money and the numbers? Because your family might be getting along really well today, but I can tell you that you set the tone for this, moms and dads. You set the tone for this before you leave this planet. And once you meet Jesus or the other guy, also I'm not here to convert you, this is how I talk. Once you meet Jesus or the other guy, at the end of the day, you don't get to set the tone anymore. It's done, it's over. So it's on to that next generation to ask the question, what do we do if you can't mentor them through it, if you can't counsel them through it, if you can't help them? And if they didn't build it, what do you think the chances of them keeping it are if they don't know how to manage it when the times are real, real tough? Every one of you that raised your hand during the late 80s that has survived and in this room, you know how to manage it when the times are tough. Yes? Yes? You do. You're here today because of it. And so when you think about this, this is where communication comes into play. So your legacy coming to fruition over here, your hopes and your dreams and your values and the vision and your priorities and your goals is all based on the plan in the middle for you and your family today. That plan in the middle is what we help people put together every day. You can prepare or you can repair. You can make a decision today. You can help the next generation and yourselves through this process. The very first thing I ask you is, where are you now? Let's just take a quick assessment about where are you now. Inside this planning packet that you see here, the resource guide, there is a quick general assessment to begin to ask you those questions today. You can take this home. This is what I call homework. And you're going to take that home and you're going to start filling that out with your spouse and you're going to ask those questions. You might even want to give that to your kids. And you want to ask them those same questions if you've got a next generation. How many next generation farmers do we have in the room that have next generation? How about no next generation? How about no matter what I say or do, there's no way you're going to raise your hand? That's pretty accurate. Okay, farmers and ranchers, you are my people. All right, here's that QR code that I had mentioned before. If you click on that, you can get a downloadable copy to this. It'll go right to your email. You'll put in your name and your email address, and you'll get the full downloadable version for this. You do not want to miss this, because there I am literally giving away inside this presentation things that I would charge well over $1,000 for to walk you through today. So it's very valuable, that QR code, to you today. I want to get right into protect and preserve. We spent a lot of time talking about this yesterday. We're not going to do as much on that today. So if you want to re-watch this part of the presentation from yesterday's version here, I'm going to hit deeper dives on other things. This is how to protect and preserve. I'm going to hit it very quickly. There are 5 ways to pay for long-term care. You can pay for it out of pocket. You can use traditional long-term care insurance. You can do an annuity that has a long-term care rider. You can utilize what we call life insurance with a long-term care benefit or chronic illness benefit, or you can gift away your assets and hopefully the state will pay for you as long as you've done that 5 years prior to applying for the benefit. Now, the reason I say that is because some people come and say, oh, it's 7 years. No, it's not, it's 5. Federal today, it's 5 years. So when you look at your situation today, you want to ask those questions. How will I pay for this? Now, remember that 72% of nursing home residents today are women? It's moms that are left behind having to figure this out, and that's why you making those decisions together is better. There are 2 different types of products on the marketplace that we talk a lot about. The first product, and I am, by the way, not a product salesman. I am here to educate, empower, and equip you. I'm not here to sell you insurance, but I'm here to make sure that you are empowered with the right questions to ask before you bring out your checkbook. Before you do something like this, this is the part you really want to pay attention to, because there's some questions you're going to want to ask. Traditional benefits, traditional long-term care benefits versus what we call life insurance policies with a long-term care hybrid. One, you pay on this policy. If you go into a nursing home, they pay out a monthly or an annual benefit, or pardon me, a monthly or a daily benefit to you. That's traditional long-term care. If you meet Jesus or the other guy early and you don't use that policy, typically that policy is lost and all the money you put into it. There's another type of policy called a life insurance hybrid policy, and this is where you purchase a life insurance death benefit and you get a long-term care rider with it. So if you purchased $500,000 and you enter into a long-term care event, that's assisted living care, in-home health care, or full-blown nursing home care, once you can't meet 2 or more of your ADLs, this policy kicks in and will pay out that $500,000 over time to your caretakers, to your family, to the facility, and make sure that that $500,000 pool of cash, either you use it during your lifetime to pay for your care, or you're passed on, and that $500,000 life insurance policy passes income tax free. Now, I'm not talking about any individual carriers, individual policies. This is the premise of how these contracts work in the marketplace. But this has become very popular, and I'm going to talk a little bit more about that later on in my session here today. Because when James got sick and I took him home, I can change a bed in 90 seconds now. I became a CNA. I didn't become a nurse, because there's a special breed for those folks, right? But I became a CNA, and I can change a bed in 90 seconds. I can clean a feeding tube. There's a lot of stuff that in my whole financial planning world did I ever think I could say I'd get good at. But when you love someone, you get good at it. Now, I remember the day when I looked into his eyes as I'm having to help him with the bathroom duties. And I don't want to be so graphic. But I remember this day because I looked in his eyes, and it's dignity. It's dignity. He wanted a professional to do it, but it was $50 an hour for a take-home nurse. And it doesn't work on hospice. They come for 1 hour a day. And you're exhausted, but you do it because you love them. And I remember thinking, I'll never, ever, ever have my children do this for me. I will find a plan. I will find a way. I will find something in place to make sure that this burden never gets transferred to them. Not that I wouldn't have done it. I'd do it in a heartbeat again. But I can tell you, your family that is with you today wants to be with you, and they don't ever want to see that look in your eyes that I saw in his that day. And so there are tools that you can utilize today. You want to talk to your planning team about them if you have questions about these things and you want to get pointed in the right direction. I've got my planning team here at the back of the room, Nick, and I've got many other planners here today. Nick and Adam and Dave are here with us in the room, but you want to talk with these guys because they can point you in the right direction with the right questions to ask. Now, I'm not going to take you through all the financials of all those things today, but I will take you through this one page. There are 4 specific questions that you want to ask about if this is something that you need to get planned for today, because it's the number one thing that keeps my farmers and ranchers up at night right now. It's the number one thing is, how do I protect it from being lost to a $10,000, $12,000, $15,000 a month nursing home bill? How do I protect it from being sold? So this is one area when we talk about indemnity versus reimbursement. You need to know which one you have inside your contract if you're going to purchase these. And the second one that you want to ask the question about past indemnity and reimbursement is you want to begin to think about, do I have calendar days or service days? You want to ask those questions in advance of buying that product, because it's the difference between, in my dad's case, my dad was 91, he passed away last year. Amazing, amazing man, farmer from southern Minnesota. And he had calendar days, not service days. So it took him 45 weeks instead of 12 weeks to get the payout from his insurance policy. Now, the difficult part is he's expecting to get it in 90 days, and he's getting it 45 weeks later. So this is an important question that you need to ask. The details. The devil's in the details. My grandma used to say it, the devil's in the details. It's true about insurances. So we got to ask those questions prior to writing checks. Now, there's a risk management assessment that you can take inside of here. It's part of your tool. It's part of your planning packet. Take that home. Let's go through that homework checklist and ask those questions. There are predators of your estate every single day. Probate, issues within the family, transfer costs, taxes. There's a process that people go through to try to defend their legacy every day. And so one of the things that I'm going to take you through is making sure that you've got some proper questions in place for your insurances. Life insurance, long-term care, disability, those things. So we're getting all the yucky stuff out of the way, because nobody, anybody in here just love buying insurance? Please, Lord, let me buy more? Said by no one ever, right? Said by no one ever. But sometimes we need those things in place for a certain purpose. Now, again, I'm not here to sell you those things. That's not my role. I'm an advisor, I'm a consultant, and what I do is I speak, teach, and train on these ideas so people go in equipped to ask the right questions. There are different types of life insurance policies. I took you through a little bit of that yesterday. You can go back and watch that video, permanent versus temporary policies. And then getting a life insurance review done. This is extremely important, or any type of insurance review, whether it's long-term care, disability, whatever you have. If you're purchasing that today, every 3 to 5 years minimum, you want to have a life insurance or a long-term care or a disability review done to make sure that that policy is doing what you paid for and will continue to do what you've paid for. I call this clean up on aisle 5 when you come to see me when you're 75. Clean up on aisle 5 looks like this. Hey, I got this little notice in the mail from my insurance company. It says I owe $14,000, and I was paying $2,000 a year. And I say, well, let's look at what type you had. And they go, well, my guy said it's going to be in place till I die. Can you die by 76? Because the problem is the policy itself was going to blow up on you, right? And so having that life insurance review is going to be really important. There are some questions inside of here that you can ask. I'm going to talk about how to structure your farm or ranch next. There are different structures in this room. You might be a C Corp, you might be a Schedule F today, you might be an LLC or a sole proprietor. You might be in a partnership today. Each one of these have a different purpose and a reason and how you can use them. There are tax benefits associated and legal benefits associated with them. So why would you use things like an LLC or an LLP today? Well, one of the reasons that people will do that is they want to protect themselves from liability. So they've got some personal assets over here, and they've got their farm assets over here. Your truck, when you put your trucks and your combine headers and you put those trailers on the road and you're putting stuff on the road today, you have liability. Liability. If it pops off the back and we hit somebody and they die today, we have liability. And we don't want the whole farm going down based on that, especially because the land carries very little liability and those trucks and trailers carry a lot of liability. Yes? This is the participation side of this. Yes or yes? Yes, they do. So when we do this, when we start looking at this, there are many things that you can do within your LLC today or your LLP to start protecting yourself and separating out those types of assets. The other thing that people will use these types of structures for is buy-sell agreements. Talk very quickly about the big 5. If you have one of these in place and you've got multiple generations farming, or you've got multiple different types of people, like for example, a couple of brothers or some cousins that are farming, or relationship between siblings that are farming today, you want to look at this and you want to ask the question, have we assessed the big 5? If you've got more than one farm kid farming in your next generation, you want to assess the big 5. What does that look like? Big 5 is this. In a buy-sell agreement, what happens if they prematurely die? What happens if somebody gets divorced? What happens if they get disabled? We call that sick or hurt for any period of time. What happens if there is a disagreement? Or if they just want out, we call that retirement. All of those can be addressed in one document. Very simply put, this is the standard of how we operate if something goes south, right? And you can do that right inside of your LLC or make it a separate agreement as part of your farm ranch planning. Now, talking a little bit about that, there's some tax benefits about planning in this area as well. For example, if I put the land in an LLC or an LLP over here and I have the operation over here on my Schedule F, and my operation can rent land from whoever. You can rent it from a farmer down the road, or you can rent it from your LLC or LLP. If you do that today, that rent, when it goes in, now becomes passive income as opposed to active income, and you have the potential to save that 15.3% self-employment tax. Now, if that's on $50,000 today, $50,000 a rent, 15.3%, you're saving about $7,500 a year just by separating out these two entities, right? $7,500 a year. Who just loves paying the IRS? Please, Lord, let me buy more. Let me just pay them more every year. Said by no farmer or rancher ever, right? We don't just love paying the IRS. We work really hard for what we have. These are some of the tools that you have available to you today if you are structured properly to be able to take advantage of those. Many more. I'm trying to fit in a 6 to 8 hour seminar in about 50 minutes. So we're going to fly through this like me on a lawnmower, like a lawnmower through my fridge when I get home at night, okay? So we're going to do this process today. And one of the things I want to share with you is there's another resource tool inside that planning packet that talks about how the farmer uses an LLC and things that you can take home today. Take it to your accountant, take it to your attorney, take it to your financial planning team. If you don't have those people, you can talk with our people at the end of this today, and we can give you a second opinion on where you're at to make sure that you're getting all of what is out there usable for you. Now, when I talk about exit strategy planning, This is really about knowing what you want to do first, the first step. This is the hardest step, guys. I've done this sat across from thousands and thousands and thousands of people nationwide. Now, I'm a North Dakota girl. I grew up here. You know my history. You know my story about Max, right? But I speak all over the nation today, all over the nation, talking to farmers and ranchers, and they all have the same conversation with me. Where do I begin? What do I do? Am I on the right track? I don't even know what the right questions are to ask. So the first thing I share with you is paint me the picture of what kind of plan you want to leave for your family. How do you want to leave the planet? And then we go from there into gathering facts and making sure we get all the information in place that you need. I've got a document checklist later on in this presentation that you can download if you're online, or you can get it here today. And you take that home and you get things organized and you put them in order and you put them all in the same box or all in the same binder. And then we start building a plan. What are the recommendations? What are the steps to follow to get you from here to there? Here's where you're at. There is where everyone wants to be. And that's when you got a plan in place that we know works. This is an A to Z plan that works. And I want to talk about this because there is so much in the area of transition planning today. Inside of here, if you pull out your planning packet, and I'm not sure, there we go, okay. If you pull out your planning packet and you look at this today, there is an A to Z checklist. We are literally giving this away to you today. We have people that spend thousands and thousands of dollars planning with many, many different teams across the nation today that don't have a concise checklist like this. And they come back and they say, geez, I wish I would have had one of them. Well, yeah. And then you can go back and check the box. Did I get this thing? Did I get this thing done? Did I ask that question? This A to Z checklist really starts with, let's first determine what do we have in land assets, what do we have in the operation. Then we go from there. And the reason we separate those out, by the way, guys, it's taxes. It's taxes. Because if you sell your equipment today, you've got recapture of depreciation, right? You resell that equipment. Right now, your equipment today, at this exact moment, is worth more than it was 5 years ago when you bought it. Go try to resell it here. There is a shortage of equipment across the nation and all throughout Canada today. We can't manufacture fast enough for all the parts that we need to come on that current equipment today. So, I'm going to talk about the can kickers for taxes in just 1 minute. But these are some of the things that we want to talk about. What are the next steps? So we separate those out. Then we determine what's our best options. Who's it going to? Who do we want it to go to? Then we talk about retirement. What are our options as far as gaining income and income streams off of this? We got cash rent. We got Social Security. We got some investments. We've got options here in which you then can make a decision about how does that retirement look for you? How much income do you want and need during that time? And then securing that for the next generation. And all through part of that process is about firing the IRS for me. Anybody want to fire the IRS today? Yeah, me too. Now, I appreciate the roads I drive on. I appreciate my freedom, so I want to pay my fair share. But I don't want to pay more than my fair share. And part of that is to understand that during this time, you're going to spend thousands and thousands of dollars during transition if we don't have a good tax plan in place. So I'm going to talk about tax here in just a minute. But retirement planning is where I want to double down on for you today. There's a retirement planning assessment. Where are you now? We're going to start there with this. I'm going to go to the whiteboard here in just a second. So if you do not have a pen in your hand and you need a pen, do one of these little waves because there's stuff on here that is not in this presentation. It's not on our PowerPoint presentation, and I'm going to whiteboard it because I've been doing this 30 years. And so I got a lot of questions after our presentation yesterday and people that had watched online, and they said, hey, can you talk about this? Can you talk about that? You betcha. I absolutely can. So one of the first things I'm going to talk about is I'm going to talk about can kicking. What is can kicking? Well, can kicking is this. Anybody deferred anything recently? Defer some grain? Defer some checks? Anybody can kick for a little while? When we talk about retirement planning, there's a couple of pieces that I talk about with retirement in general. The first thing, and I'm going to get into this in just 1 second, the first thing I want to share with you is when you're hitting retirement, when you're asking those questions about retirement and you're saying, hey, I want to do something generationally here. Now, you might want to work on that farm or on that ranch till you're gone, right? My grandfather said, hey, take me out in a pine box. I never want to do anything other than this, right? That's great. Sometimes people say, well, I got a bucket list. I got other things I want to do. I don't want to work full time. I don't want to do all the book stuff, but I like being in the tractor. I like doing this part. So my kid's going to start transitioning and taking over those things. And that transition takes time. And it's time, energy, and money. All three of those things today, time, energy, and money, are connected in your small business. Make no mistake, we run businesses here today, right? And you're running multi-million dollar businesses. I'm looking at your balance sheets. My team is looking at your balance sheets. So when we're asking the question about your bucket list, it's not just about maybe where do you want to take a cruise with your spouse, which is awesome, go for it, that sounds fun. But it's also about creating that bucket list that matters. What are the things that you want to have, do, and become down the road, then no matter what. And there's a retirement timeline for people, and I'm going to talk about that can kicking, because in the front end of your career, you're building. You're buying land, you're trying to, build up your equipment line, you're trying to build up your balance sheet, you're building over time. And you might have some cash in the bank and some retirement accounts and those types of things. And then we hit closer to retirement and we say, oh, shoot, I don't want to buy that equipment anymore. Junior's going to buy that equipment. And we say, okay, great, Junior's going to buy that. But there's a time value of money here that's associated with this. And I want to really focus on taxes for a moment. If you today are in this situation where you're saying, hey, I've got some deferred, right? I've got some deferred grain. I've got some assets sitting in the bins today. If I've got assets sitting in the bins or in the barns that have not yet been taxed, I had a guy over by the Stanley area. They had oil wells. It's a nice day when you got some oil wells, right? But they had some oil wells, and he just kept building more bins because he didn't want to sell the grain that he had. Because he said, geez, I'm going to pay all this money in taxes, Marissa. I don't want to do that. And I said, well, okay, have you thought about this other strategy? And I'm going to give you line 16 here in just a moment. But there's a couple of things that you can do. And some of the things that you can do are what we call pension planning. You can do retirement planning. And that's why we're in that section right now as we talk about retirement. So if you have in your bins today, you got $1 million worth of grain sitting out there. There are some things that you can do to make that money go someplace, because the time value of money is affecting you here today. You're storing dollars in the grains that are in the bins that are making you nothing. Yes? Because you don't get paid until you sell, correct? You don't get paid until you sell. And so when I'm putting it in the bins and I'm storing it up, I'm losing money every single year that I don't make a decision just because I don't have a tax plan. Does that make sense? And when we don't have a tax plan, we lose money over time. This is the money for your children, for your grandchildren, for your local church, for your local organizations that are important to you, that could be positioned to grow and earn. If you take $100,000 when you're 30, by the time you're 40, $100,000, earning a 7% rate of return, every 10 years that money will double. It's called the rule of 72. I'm a big math nerd. It's also why I couldn't get a date for like 5 years. I love tax code, so what are you going to do? But this math nerd number, when you think about your children and grandchildren today, or something that you want to sow good seeds into the world with, $100,000 over time is not $100,000 to you. $100,000 earning 7%, every 10 years that money's doubles. If you're 30, if your kid's 30 today, if your grandkid's 30 today, that $100,000 at 40 is now worth $200,000. At 50 is now worth $400,000. At 60 is now worth $800,000. This is big math over time. It's like a snowball effect, time value of money over time. Now, coming into those tax rules, this is going to be the part that is the double down on it for you this year, guys. In the United States today, in America today, there are two sets of rules when it comes to taxation. One for the informed, one for the uninformed. Both are legal. Both are legal. And people say, well, no, Marissa, there's only one set of tax rules. Yes, but there's two sets of people that look at it. One for the informed, one for the uninformed. So when you look at making your decisions today, every dime that you give away, every dime that is not being well stewarded, and I use words like that, I know it's a little old school, but it's how I talk. You are a steward of what's been placed in your hands and through you generationally today. You are a steward of the land. You are a steward of the assets. You are a steward of the business. You are a steward of your cash. You are a steward of your family. And when we look at that stewardship over time, we have decisions to make. So I'm going to talk a little bit about what are some of the options that you have available when it comes to tax planning. The first question I ask you is, do you have a tax strategist or do you have a tax preparer? The difference looks like this. A tax preparer, you bring all your stuff into Jerry. Jerry's a great guy. I love Jerry. He's been my local accountant for many, many, many years. He's great. Jerry takes all the information. He puts it in. He says, dink, dink, dink. Tom and Betty, this is what you owe. And Tom and Betty go, oh, geez, Jerry, that's pretty ugly, right? Especially this year if you can't find any pre-buys or can't find some iron. There's no 179 deduction if you can't find some iron, right? Which is funny because we're at the Big Iron show. I love that. Okay, just side note. Tax preparers versus tax strategists. A tax strategist, this is Jerry number 2. You bring in your stuff to Jerry number 2, tax strategist, and Jerry says, dink, dink, dink. Here's what you owe. Here's 15 things you can do differently before year end to make sure. So people that are meeting with their accountants in November or in December before year end are making these decisions and they're saying, what can we do differently? I'm going to give you multiple strategies right now of things that you can do differently this year. Now, the guys that you want to see are sitting along that back table here at the back because they can give you more details. In an hour presentation, I can only give you so much. So I'm going to blow through this, right? But they can give you all the details past this to take it back with your accountant and make sure you get the right information so you get it done this year, so that you make sure you've got the option in place instead of having to write huge checks next year. Now, before I get into that, I'm actually going to let me go to the next one here real quick. When we talk about solo Ks and SEPs, there are 2 different types of plans on the marketplace. And here's the 2 plans that's covered in the presentation here in just a moment. But there's a section of the Internal Revenue Code, and I'm going to show you the exact tax line on here. Right here. This is page 2 on your tax return, line 16. There's a section there that is underlined. It's called Qualified Plans. And I'm going to go back and speak about what these qualified plans are. If you circle, star, or do nothing else other than write this one section down, this one little tiny line, this beautiful little fabulous tax section of the code, can you see my veins popping because I'm all excited? This little fabulous line has the potential to save you hundreds of thousands of dollars and create a place for you to retire from and on down the road. Not just your cash rent, not just the sale of your equipment. This is an opportunity for you. So when you look at this line, it's going to talk about solo Ks, it's going to talk about SEPs, it's going to talk about retirement plans that you have options for. The 2 retirement plans that we have today are qualified plans under defined benefit plans and defined contribution plans. Now, many of you in this room today have traditional IRAs, you have SEPs. That's pretty standard. A SEP is pretty standard. And when you look at the numbers today, under a defined contribution plan, you say, hey, I made $100,000, I'm going to take 20%, and I'm going to put that 20% back, $20,000, now it's tax deductible off that line. But if you got $1 million of grain in the bins today, that $20,000 isn't doing nothing, right? It's barely hitting the surface. So we utilize something called defined benefit plans, qualified plans, and there's many different types of these. You can talk with our guys about this more in detail, which one works right for you. But these are structured plans, so you can move your dollars from the bins, and when you sell this today, you can put it into a pension account, and I can piece by piece move that $200,000 a year over for the next 5 years, or move that $300,000 a year over for the next 3 years. Make it 100% tax deductible to you off that line that I just showed you. Create a pool of cash, and when you get ready to actually retire, so instead of taking $1 million of grain, selling it all in 1 year, which is now income taxable to you, and paying 40% on that number, $1 million times 40%, who's a math wizard with me today? $400,000. Who wants to write an IRS check for $400,000? Yeah, not me, right? So here's the other option. We then reposition those dollars into a pension plan, and then you say, hey, I'm 72, I'm 70-something, and I want to start pulling those dollars out over time. I'm going to pull out 50 grand a year, or I'm going to pull out 100 grand a year on that money, and I only pay tax on what I pull out at the time I pull those dollars out. So you have the opportunity to, instead of paying 40% on that, If I'm taking $100,000 a year, now I'm paying 20% tax as opposed to 40% tax. Which is better, 40% tax or 20% tax? It's an IQ question. You guys are smart, come on. Okay, everybody's with me on this one. So unless you just love paying the IRS, these are the two places that you want to ask your people about today. You want to ask your tax strategist. If you don't have a tax strategist, I have tax strategists in the room. We are not here to replace your local accountants or attorneys or financial people. We are here to come alongside them because we are farm specialists. This is what we do. Farm financial specialists. And we walk with your people and we say, hey, have you considered this, 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 and this? Here's the strategies. Here's the options. Here's the next steps. Here's what you can do to make a difference in your return today, but also for your future, for your children and your children's children. Now, one of the things that we hear a lot about is, hey, Marissa, I'm already doing a SEP. That's great. Let me show you another little section of the tax code that is right part of this. It's under what we call 401A language. I know when I talk like that, I never get dates. It's a bad thing, right? Because people are like, man, she's such a nerd. I'm like, yes, but nerds rule the world, and here's why. Here's the difference. Would you rather write off $20,000 or $47,000? The difference between a solo K and a SEP today, same math, same income levels, I can put back more. So if you don't want to pay tax on that today, you want to defer some of that down the road, this is huge. Now people say, well, geez, Marissa, what am I going to put it into? Well, here's some options. Right now, we've all seen what's been happening in the markets. You watching the markets? Watching the stock market recently? People say, my 401k, my retirement plan, my SEP, my traditional IRA just went, right? The sound effects are extra. But it's not funny, actually, because we're looking at our statements and we're saying, what are we going to do? Because we worked our tails off our whole life to build something, and now what do we have? There's some fixed options. In every obstacle, there is an opportunity. I believe this. In every obstacle, there's an opportunity. In every challenge, there's a change that can happen. There's a change of mind. There's a change of opportunities that we can grow forward better. We can learn more. We can make something out of it. So in every obstacle, right now, interest rates are rising. Markets just fell. Stock markets fell. I don't want to put it in the stock market. There's places right now that you can get a 4.65% fixed guaranteed rate on your assets. There's places today in the markets, there are products in the marketplace today, and I'm not a product peddler. That's not what I'm here to do, so I'm not going to give you names of products. If you have questions on things like that, you can talk to different financial people. We've got people here that can direct you and your people to the right place for that. They're at the back of the room. But right now, there's a product on the marketplace that allows you to put money into a guaranteed product that guarantees if the markets go down 8, 10, 12, 20%, you lose zero. But if the markets go up 8, 10, 12%, you have a max cap at 9%. So if the markets go up, 8%, you're going to make your 8%, and they're going to lock those values in. If the markets go down 9%, you're guaranteed zero. You don't lose anything of that principle, and that's huge today for people that have worked their whole life like I have. I have been working since the time I was this high. And every dime I look at today, I want to be a good steward of. I want to have the conversation, oh, good and faithful, you did good, right? You did good. With people, with assets, with time, with our energy. So making decisions when it comes to this line 16, it can be a powerful, powerful friend for you today. Now, talk a little bit about the difference between retail investing and institutional investing. Retail investing is where you're going to work with commission-based folks today, where they charge a commission. Every time they buy, sell, change, move, they get paid again. So how often do you hear from your commission-based folks? Well, every time they want to buy, sell, change, or move something so that they make a commission most of the time. Not all of the time, but there's another way of investing today. It's called institutional investing. This is where the affluent invest, and they pay a flat management fee as opposed to paying for a commission-based product sale every single time. And I always ask people the question, do we ask, how do you get paid? Did you ask? Do you ask? How did you get paid? And then the next question is it put in writing? Now, my firm is a fiduciary firm, Freedom Financial Group today. What we do every single day for our team is we build plans. We build out things that look like this, where we put our recommendations in writing. And we can get sued for that if it's not right? By the way, I've never been sued in 30 years, so oh, happy day. Find me some wood. I need to knock on some wood, okay? But this is the key, looking at how all of these 4 things work together: your tax, your legal, your risk, and your wealth, how they come together for your plan and for your family. We have to ask better questions so that we can have more opportunities for our families down the road, so that we can be better stewards for the opportunities that we already have. And so part of this is a flat management fee versus a sales commission. Now, my real estate agent is my best friend. I love her. She's wonderful. But every time Alyssa knocks on my door, it's dink, 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 6%, right? Every time she buys me a house, every time she sells me a property, every time it's dink, 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 6%. You know, I said to Alyssa, you know what? We should be partners. We should be partners. And she said, well, I don't know what you mean. I said, how about we go into some real estate deals together? We'll do some rental properties together. She said, okay. I said, that's good. So that 6% commission you have? No more, honey. What we go into together, we go out of together. We're partners. And so every time I drive past that property or she drives past that property, we're saying, hey, we got to do cleanup on aisle 5. We want to make sure that roof is good. Because as a real estate agent, she doesn't come back 6 months from now and look at my roof and make sure it's good on that property. But if she's my partner, which is what institutional investing is, she watches it every day with me. She's watching the bottom line. She's looking at how well does she steward it. So this is money management 101. We got to ask the questions. How do you get paid? What's the value over time? And what are my options? Now I'm going to talk about estate planning here. Not sure how much time I got left, so guys, if you could give me a little time check, that'd be great. When I talk about estate planning, here's a checklist for you today. And I got a few stories that I want to share with you when it comes to your estate plan, but this is an extremely important checklist, an assessment of where you're at to make sure that you've got things in order. And when you do that, the very first thing that I talk about is fair versus equal. Many times when we're talking about estate planning for family farms, people say, well, you know, I want to be fair. And then we got other kids that say, well, it should be equal. But equal doesn't always work when we start looking at that. And so when we start splitting up farms and ranches and we've got one farming kid or one farming heir and we've got 3 non-farming heirs, how do you divide that thing 25%? So it's a conversation to say, where are those income streams going to come from? What does that really look like? What was the sweat equity they put in over time? And we have to have that conversation. It's the conversations that we sit around your kitchen table having. We say, if that kid has been on the farm for 30, 40, 50 years, oh good and faithful, next generation. You have stayed, you have built, you have sacrificed. You don't have a fancy 401k at some really fancy place in Minneapolis today. Great. Oh good and faithful, we want to bless you. And part of that is fair versus equal. And part of that is sweat equity. And how do we have those conversations with your family? So these are things that we help facilitate so we put the numbers in place for your people. Now, there are 4 planning tools. Depending on what state you're in, these could be called different things, but I'm going to give you the basics. The first one is a will. A will says this: I own this stuff. When I die, this is who it's going to go to. That's called a distribution. It's going to go out of my will and be distributed to these people. Then there are different types of trusts. There's a revocable living trust, which is something that can be changed at any time, and there is irrevocable trusts, which cannot be changed at any time. And then one of the last things that we talk about is quitclaim deeds with life estate. You can really only use these for land because you have to quit your claim on the deed. Life estate means you get to keep the income stream off of it till you pass. And then we have 2 what we call living documents. Now I'm going to take you through those basics of that. Now, benefits and drawbacks of each one of these. When you talk about wills today, here's one of the benefits of a will. It's simple, it's easy. Here's who gets what and when and how. Right? Now, the downside of that is a will has to go through probate. Probate is the court-supervised process of moving it out of your name into their names, and when you move it out of your name into their name, that's a cost through transfer costs. There's a cost to do this. It's also public record unless you filed some additional forms with the courthouse, and your team has filed some additional forms. It's public record, so I can go down to any old courthouse in this great nation and find out who got what, when, and how much. So if you want to protect your next generation, you want to ask, hey, have you filed this affidavit to keep this private? Because if not, you put them at risk. There are predators looking for your assets today, every single day. I have worked with hundreds of families who have lost family members. I had one last year. her husband died. She got call after call after call for people who said, hey, he owed me money. Hey, he did this. Hey, he did that. Scammers, absolute scammers. And I got, I'm kind of a bulldog. Do not be fooled by my fancy heels today. Do not be fooled. You can take the girl off the farm, but you cannot take the farm out of the girl. And I bulldogged. I called these guys back and I said, don't ever call my client again. Forget you knew her name. Burn the newspaper clipping where you saw this, because you and I both know what you're doing is a dirty dog deal. They don't owe you nothing. And they went, yeah, okay. Didn't hear back from them again. But you know how many spouses have gone through and written checks in the end because they don't know? They don't know. My husband does all sorts of deals. I don't know. So dirty dog deals. Keeping it private is super important. And then at what age do you want them to inherit the kingdom, right? You're going to give keys to the kingdom. You want to ask the question, at what age is appropriate for them to get it? Is it 18? Is it 21? Is it 25? If you've got children or grandchildren today, I've got grandchildren. I know what you're thinking. There's no way that girl could be that old. Thank you. I appreciate it. At least somebody loves me in the back there. Thank you. So I've got trusts in place. I've got some things that will pass outright, that I want to go outright to those people, and I've got some things that I want to make sure are kept safe generationally for my family long term. We call those trusts. There are two different types. An irrevocable trust is one that cannot be changed. A revocable living trust can be changed at any time. By the way, if you have a revocable living trust, you want to be very careful in asking that question, is it protected from nursing home? Because sometimes people have been sold trusts and they say, well, it's all protected from nursing home. Are you sure? Are you sure? And the answer to that is most of the time not. So we want to ask that question, is this set up correctly? And the devil's in the details, just like my grandmother said. Now, this is a flow chart, and it talks a little bit about a revocable living trust, how that works, and why people would do a revocable living trust is to bypass probate and keep it private. It's a private family document. So you sit around a table, you build this document, you transfer your assets into it, you still own it. You can still buy, sell, change, rent, move, do all the same things that you could do outside of the trust, you can do inside of the trust. Two important factors here. If you have an active operation, you want to highly consider before you put your active operation into a trust upon your death, and here's why this is, because they will have to keep two separate sets of tax returns, one for their current Schedule F and one for the trust tax return when you're gone. Most farmers and ranchers don't just love bookwork. They say, oh, please, let me do my bookwork twice. Yay! That sounds fun. Never is that fun. It's never fun, unless you're an accountant, and then that's always fun, I guess. So you want to consider, what are you putting in there? Land is one that we see often. You want to create some opportunities so that they can buy, sell, change, rent, or maybe you don't want those opportunities, but you get to control, you get to say who, what, when, and where with this. Now, I have 3 kids, and of my 3 kids, I have a middle son. He's 26. He's a good boy. I named him Gabriel after the angel. Now, here's what happens when you name your son Gabriel after the angel. God laughs at you, and he goes, good luck, sister. And so God sent me this kid he's a good boy. But if he sees hot blondes and beer, Gabe does not make great decisions, okay? So when Gabe's getting my assets one day, I'm thinking about hot blondes and beer, and I'm thinking, no, buddy, I'm not going to give you the keys to kingdom here, right? So I've set some things in place, so that the assets that are going to go through me to them, to my children and to my grandchildren, can be stewarded. They can be protected from lawsuits, bankruptcy, divorce. They can make sure that income streams can go out to charitable organizations that are important to me. Places like Child Evangelism Fellowship that saved me when I was a kid. I can name all these places inside of here. So the difference between a will and trust, again, do you want it to go outright, or do you want it to be in a place where they could manage it, or they could have someone else manage it for them over time? Quitclaim deeds with life estate, I'm not going to talk a lot about these today, other than to say you really want to ask yourself the question, has my transfer been complete? And you want to ask the second question, has my accountant done the when they do the quitclaim deed with a life estate, have you also done the gift tax return if it's over the amount that you can allowably give per year tax-free? Now, past that, I want to talk about 2 important areas that we we spend some time in healthcare directives and durable power of attorney. In 2015, I shared with you that my fiance had cancer. In the middle of the night, we're at Trinity Hospital in Minot, North Dakota, and I'm calling my team because he looked at me and I said, well, babe, where is your healthcare directive, your durable power of attorney, your will, your stuff? He looks at me, and we weren't married, mind you. That's the stuff you do after you're married, I guess. And I said, where's your stuff? And he said, I don't have those things. And I'm thinking to myself, you are hot but not smart, okay? That was funny. Not funny. Okay, not funny. So in the middle of the night, I'm calling my attorney working in my office. I'm calling 2 people on my staff. I'm saying, hey, I need your help. I need you to prepare these documents. I need you to get them there before 6 a.m. because we are going to be airlifted to Minneapolis for a surgery. And he has a family that beat him when he was a young boy. Before he spent 2 tours in Iraq getting out of that household and serving his country, where out of his battalion, 40 of his guys are also dead from cancer. Whatever he breathed in Iraq, protecting us from, the thing that ended up killing him. I said, we got to do better, guys. So we brought him together in the middle of the night. I said, you got to get here before they give him the medication because once he's past this point, he won't be able to legally sign this. So we got there in time, and I remember the day, literally the worst day of my life. And the reason I tell you this story is because I don't ever want it to happen to any family that I had the opportunity to speak life into. We were in Trinity. It's 100 days later. We went home, and he said, babe, take me home. I don't want to die here in a hospital away from our family and friends. And I was praying over him, a little more information than you probably need, but I was praying over him, and I said, please, Lord, just send us a miracle. And we didn't get our miracle in that day. We did get a miracle. But he said, you keep praying for a miracle, but I already got my miracle the day that I found you. I found my faith. I know where I'm going, and I need you to live. I need you to live every day. I need you to make me a promise that you will get up every day. You were born to change the world. You were born to help people. Get up. Do not spend 5 years in a bottle. You get up and you tell the story, and you help other people do this. And I remember the day that I asked him about what does he want to have done here at the end. And I looked at the clock, and I was in charge. I was the healthcare agent. And I looked at the clock, and he looked at the clock, and he knew when his feeding tube should be turned on every day. And he was a time guy, right? He's a ranger. He's an Army Ranger. He looks at the clock, he looks at me, looks at the clock, looks at me, and he knew. That was the day that I had said no more life-preserving methods for him. And I can tell you, I see families every day, families just like yours, that have a hole in their heart because they never had this discussion. And I want to help you. I want to help you not ever have to have a hole in your heart as you look at your loved one if you have to make this decision. I'm at peace with the decision that I made because I know I did everything I could for him and with him. But I want to give you an opportunity today to make sure that you do this planning for your family, to make sure that you put this in place, that you get it right, and you have the conversation with them so we don't leave a hole in their heart. There's an estate planning checklist here. Please get this. Please download this link. This is free. This is the loss of a loved one checklist. And if I've sat across from hundreds of families helping them prepare for now what's next. So this checklist will help you. It will help them. This document checklist is the things that we need to get in order, have in a spot, in a suitcase, on a jump drive, whatever you need it placed in today. You want to get this with your family. You want to go through this checklist and make sure that they have these things in order, because the people that are left behind, you can prepare or you can repair. You can make a decision today to lead in your families, whether you're the kid, whether you're the mom, whether you're the dad, whether you're the daughter-in-law, whether you're the son-in-law. You can make a decision to lead in your family and help them answer these questions. What is the plan? What's next for us? Who can help us get this done? It's the why, what, who, how, and when. What's the plan? Let's build this out. Let's get it on paper. Let's at least find out, what do you want? And I know this isn't easy. I know this is hard. But if you do these things, one day, I've sat on the other side of the table of the families that have done this, and they've done it right, and they've followed the steps in this planning process. They've written down the names and the numbers of who do you call when things go wrong or things go south? Who do you trust? And when you use this list, they can help you. You can help them. You can, in those moments where they're overwhelmed, you can help them write it down and break it down. This is what we do at Freedom Financial Group. We help families bring these things together. Your tax plan, your legal plan, your wealth management, your risk management, your family communication, really what it is that you worked a lifetime for. You built a legacy. Let's make sure it ends up in the hands of the people that you love. Let's make sure it ends up in the hands of the people that you can trust to continue that legacy past your life. This is our planning team. We have offices in Minot, Bismarck, Jamestown. We have offices that we meet out of here in Fargo. We meet with our clients all over the United States today. We have a evaluation. If you would do me a favor today, and I'm just going to ask you, I want to get better every time. I want to get better so that I can serve more families. I feel like every day I'm grabbing my water pistols and I'm charging the gates of hell and I'm just bringing people back with me. So if you would fill out this evaluation form, if you'd like to get some additional information and you want to kick the tires and you got questions, we got answers. Our team is here to help you. If you got questions, we're going to answer those questions. We're going to help you find the answers for your family. If you fill out that evaluation form, please let me know how we did. Is there areas that you'd like to know more about? We'll send you some information in the mail. We also have a Get Started Planning Kit for you. It looks just like this. This is a free planning kit for you today. It's going to get all that information that I talked about, put it in order, and this begins the process. This is a beginning, not an end. It's part of the process, but you can take this home today, use it with whomever you choose, but use it. So thank you so much for the opportunity to be with you today. Thank you for giving me your time and your energy. I wish you and your family well. We look forward to visiting with you very, very soon. Thank you so much.